Hi, this is Carol Topp CPA from Business Tips and Taxes for Writers. I've got kind of an interesting story I just read in a journal I subscribe to. It's called Tax Pro Monthly from the National Association of Tax Professionals. I bet none of you have read it, but it's an interesting cover story about an author, and I wanted to share it with you about what happened to this author. The title of the article is "The IRS Denies Business Expenses, Self-Proclaimed Author Liable for Additional Tax." What happened was back in 2006, and a wannabe author named Michael, he had a day job, but he took some time off of work, vacation time in 2006 and early 2007, to travel internationally because he wanted to write a book on worldwide travel. He didn't have a book contract. I think he was doing research without a book contract in place. He went to South America, spending 3 days in each country, and then in 2007 he went to Asia, Africa, and Australia. He racked up travel expenses of about $19,000, but no income because the book hadn't been written yet. And so he wanted to take a business loss of $19,000, and that, of course, decreased the taxes that he would owe on his income from his day job. Well, the IRS didn't like that. And they said, you owe us $5,000 in income tax, and we're going to assess you a $1,000 penalty too. Well, Michael took it to a tax court. The tax court said, well, we're going to look at a couple things. We're going to look at 3 things in this case. We're going to look to see whether you, the taxpayer, Michael, undertook this activity for profit, meaning not just a hobby, but really for profit. He had written a rather detailed business plan that helped him show that he really did have a profit motive. Okay, good. Second of all, the tax court wanted to look at whether he was regularly and actively involved in the business. That was kind of important. And finally, whether the business activity actually ever commenced. There were 2 things this article pointed out that kind of got Michael in the tax court. He basically lost. Well, he did. He lost. Here's one thing that the tax court said that didn't help him at all. He did not do enough substantiation of the business purpose of his expenses. See, he kept a log. He kept a journal. He would write down the date of where he was, the place of where he was, and each expense. So date, where he was, and the expense. But he never recorded the business purpose of those expenses. Now, he had an overall broad testimony that the trip was a research expense for this future book he was going to write, but not each individual expense had a business purpose. So the tax court said, that substantiation you had there, it's not good enough. So when you guys are keeping expenses, don't just write down the date, the item, what you bought, and the dollar amount. Give a purpose. Why did you have this expense? See, the tax court's trying to determine whether this was a legitimate business deduction or whether it was personal. But here's the real kicker. The court was looking at whether he had any evidence of continued or repeated activity as an author, and this guy didn't. He didn't have a book contract. Here's what happened. This came to court in March 2011, 5 years after he took the trip. 4.5, almost 5 years. 5 years. He still didn't have a book published. He actually hadn't completed it. Maybe not even started it, but he certainly hadn't completed it 5 years later. So the court ended up saying, sorry, I don't think you were really continually, regularly, repeatedly in business as an author. So they said, sorry, that trip you took, we don't think that had a business purpose at all. You didn't record it in your substantiation, the business purpose. You never even wrote the book. So anyway, they ended up saying, sorry, you owe us $5,000. The tax court did forgive the penalty because he had gone and consulted a tax professional to get some advice about what expenses were deductible. So he did know the $1,000 penalty. He acted on good faith of that preparer. Now, the preparer was probably right in saying, yeah, typically travel and research expenses for an author are tax deductible. But a good professional would have said, but you know, you haven't quite proven yourself as an author yet to take exorbitant expenses like this. $20,000 in expenses, not a drop of income to show for it. Sounds a little fishy to me. Sounded fishy to the IRS, and that's why this guy lost his case. So anyway, I thought that was kind of an interesting case about an author. He lost to the IRS. Ultimately, we like it better when they win, but we can learn a lot about the need for proper substantiation and continual or repeated activity as an author in order to look legitimate in the eyes of the tax court. This has been Carol Topp from Business Tips and Taxes for Writers. You can go to the website to learn more tips about running your writing business, or the shorter version of the website is simply taxesforwriters.com. Thanks for listening. Bye-bye.